Okay, I think we're back. Are we back? Oh yes, we're back. We're back. Okay. I think there's a little bit of a glitch there from YouTube and from my streaming platform here. Okay, perfect. It's reconnecting now. Okay, so as I was saying, my goal here for the end of the year for this channel will be 1,000 subscribers. So it'll be pretty amazing to see. So if anyone is watching the stream currently or the replay of this stream, and if you guys are new and if you guys like what you heard, or you guys are like what I'm saying now, right? I haven't said much at all for the stream yet, but if you do, make sure you guys hit that subscribe button, but most importantly, make sure you guys hit that notification bell icon that appears right after you subscribe. All right, so that you guys are notified when I'm live and when I'm also when I have also uploaded a new YouTube video. Okay, and so far, my 2026 videos have been gaining a lot of attention. So hopefully this continues, and maybe, just maybe, I'm hopefully providing a lot of great value and most importantly applicable information that is going to be very, very useful to your own trading accounts and your own trading journeys. And again, if you guys have any questions, please put it in the live chat room here on the stream, or if you guys have any personal questions that you want to ask regarding your own trading, please DM me on Instagram at chartsfocus1. It's the same handle as this YouTube channel if you guys don't know how to spell it. Chartsfocus1, all right? At chartsfocus1 on Instagram. Okay, so with that being said, let's begin with today's topic for the stream, which is AFRM, Affirm Holdings Incorporated. So this is the very second swing trade idea official swing trade idea for this fiscal year 2026 that has been featured in the CFO Swinger Watch Report. And I'll give you guys a nice little sneak peek to the CFO Swinger Watch Report, and here it is. All right, let me bring it on over. Looks like there's some people on it right now. Okay, so here is the 3-pager that is a part of the overall report, and the report this week was only 11 pages, but again, that is still a bit long because I try to bring it down to at least 10 pages, but usually I overshoot that, I go to 11, 12, sometimes 13, sometimes even 15 in the past. And again, you guys see how small the words are here, right? The actual size of these letters and words. So again, there's a lot of information that I like to put on, but then again, I try to kind of make it as succinct as possible, but most importantly, I give you guys the most important and applicable information that you guys need. And so I wrote about a firm here, ticker symbol AFRM, and I was basically from just a general summary here. I'm being cautious about the company from a fundamental perspective and an industry perspective as well, since this is a buy now, pay later market that we're talking about, an industry that we're talking about. And Affirm is one of the leading companies that have been trying to become one of the leading buy now, pay later technological companies out there, because there's a bunch that have popped up in the last 10 years, right? In the last, even just most recently in the last 5 years, right? And so it was interesting to see, because this business model is essentially very directly tied to the behavior of the consumer and the overall consumer sentiment, and also the actual cycles of the economy, right? And so, it's a very, I would say it's a very contradicting business in some ways. I'll explain why in a couple minutes here. But it's one of those companies where they have to adapt fairly quickly to the ever-changing fluctuations of consumer behavior, consumer sentiment, and overall cycles of the economy, even just short-term economic events, right? And if they're not staying on top of that, right, they can go under fairly quickly, and they can stay under fairly quickly for long periods of time. And most, if not all, buy now, pay later companies have been experiencing that for the last, more than half a decade at this point, right? However, Affirm's major competitor Klarna, right? If you guys don't know, Klarna also became, they became a publicly traded company. So they IPO'd back in mid to late last year, if I'm not mistaken. Let's make sure. Yeah, late last year, right? So right at the end of Q3 in September. And Klarna was one of the first buy now, pay later companies that were able to achieve a profit, right? They become a profitable company. I think they're operating So they achieved profitability. Yeah, overall. I was trying to remember what specific metric that I was looking at, but yes. So they did achieve profitability, and AFRM decided to, I believe Klarna achieved that in 2024. And so obviously, as I've said earlier a couple of seconds ago, in order to stay competitive, right, in order to stay on top of the consumer changes, consumer behavior, the overall economic cycle, right, AFRM for the fiscal year 2025, they've firmly stated to their investors and shareholders that they will be focused on profitability, right? And one way that they're going to do that is obviously cutting costs. So there's a lot of costs that go in. Not even just the marketing alone is a huge cost, right? But the overall operating costs alone for buy now, pay later companies is humongous. And most, if not all, buy now, pay later companies have a huge amount of debt, total debt, and AFRM is one of those companies. Now, what's interesting is that in 2025, they're actually able to achieve profitability. So first of all, let me give you guys a kind of a positive here from AFRM. Okay, so like I said here, and let's first start off with this. Let's start off with this company. Excuse me, this paragraph. So I said, personally, I don't like their margins, but for the entire industry, it's a metric that shouldn't have high expectations. However, AFRM here has been able to maintain a pretty steady margin average for about 2 fiscal years. Of course, they have their ups and downs due to the major factors that control their businesses, as mentioned above. Again, what factors are those? Consumer behavior, sentiment, and overall economic trends, right? The cycles. But they have been able to stick to a 40% or over gross profit margins. And this type of financial discipline is pretty hard to maintain, but in the fiscal year of 2025, they were able to do it, as that year became their first profitable quarter in Q4 of last year. Okay? So this is a pretty big pivot, a huge monumental moment for this company. And they also reported a sustainable profitability for the entire fiscal year as well. So they turned a new leaf as the FCF or free cash flow continued to stay positive, and overall net incomes continue to show positive numbers as well on that front. So this definitely shows that their entire strategy to strive for profitability last year has paid off for now. But again, okay, most BNPL companies have yet to show that they can stick to this routine of profitability even if economic downturns occur or consumer behaviors quickly change in a short time frame. But on the other hand, AFRM's strategy to introduce interest on top of the payments that consumers have to pay have seemed to boost their revenue streams as well. So for most of 2025, guys, AFRM's strategy to lower cost and find different ways to expand their revenue stream has essentially paid off, right? And one of the major ways that AFRM has been expanding the revenue streams is introducing interest, right, on top of the payment plan that consumers choose. And specifically, these payment plans that their consumers are choosing are long-term payment plans. Because if you guys have never used buy now, pay later, I have not used it, but I've always seen it online. They offer, it's always like traditional, conventional four different type of payments, right? So the total amount of whatever you're buying is split up into 4 different payments. So that's the usual traditional payment plan, right? That most BNPL companies offer. But AFRM began to offer these long-term loans, essentially, right? But consumers actually like this idea because they have an interest rate, right? I even wrote it here, right? So it's a fixed interest rate that consumers like to see, right? Because even with or without interest rates, consumers that are attracted to buy now, pay later options seem to favor the longer term plans due to their flexibility, right? Consumers don't like to see that upfront pain of how much that they'll be set back on whatever purchase that they're looking to do, right? So it just made logical sense for a firm to see that, right, and use it as leverage, right? They're offering these long-term payment plans, these loans, and currently they have 7 million loans, right? And now you guys might be thinking, wait a second, wait. So are they just going to be offering these long-term payment plans for anyone, right? Well, that's not the thing, right? Because a firm has been able to stay on top of other companies out there and stay competitive through their proprietary machine learning algorithm, right? ML algorithm. And that specific ML algorithm, okay, they can do real-time risk checks at the individual transaction level, right? For every single one of those 7 million loans. So, it's not like they're just going to be giving out these I guess, unconventional loans to anyone out there, any consumer. They will do these quote-unquote soft checks, right, on people's credit profiles, and it's just one of those things that make this buy now pay later option a bit more favorable for consumers to choose a firm during checkout. And that's what I read from some of the articles that they've put out, right? And obviously this all comes from the research that the company has done itself, right? And obviously the overall R&D that they put into the company, right, which is also a huge amount. It's pretty interesting to see how a firm has been able to achieve that type of profitability compared to Klarna, right? Because Klarna had a slightly different approach. However, both companies have kind of gone that same route of reducing operating costs, right, over the longer term period, and they continue to want to focus on that angle to improve their business operations, and obviously to improve their margins as well, their overall total margins. So, I think from again, this is kind of, I've always said that buy now pay later companies are very contradicting, right? Because first of all, right, when you think about consumer behavior, consumer sentiment, economic cycles, right, if in one perspective, right, if there's an economic downturn and consumer sentiment is at a low, it may seem pretty good for buy now pay later companies for consumers, right, where they want to lessen the pain that they will have to pay upfront for any product that they need or that they want during such economic downturns, and consumers may increase the utilization of buy now pay later companies, right? So that's one perspective. But on the other side, it's the direct opposite, right? Because if consumer sentiment and consumer behavior shows that there are less people buying stuff, there's less people buying stuff online specifically, whether it be groceries or anything like that. Because I know it sounds ridiculous and crazy right now, but due to the current economy, there's even buy now pay later options for groceries. So anyways, that was a little tangent there, but that other perspective states that when we have such low consumer sentiment, consumer behavior is showing that people are not buying anything online or just at brick and mortar stores, right? And they choose to do, well, if these people are looking at buy now pay later options, they won't choose anything, right? They're not going to be shopping at all. And so that's where that perspective says buy now pay later companies are not something that you guys should be looking into for the longer term as a long-term investment, because it is risky in that perspective. And the fact that these companies can actually become more of a cyclical companies, which again, that makes sense, right? And the fact that these companies are so tied to such factors, specifically the consumer behavior, sentiment, and economic cycles, it does make sense that there is a possibility for all of these buy now pay later companies to become cyclical stocks in the stock market, right? So my own personal opinion on this, I know people have asked me before, just based on the fundamentals, it doesn't look too good, but I would have to give it to them that they were able to stay fiscally and financially disciplined enough to be able to become to achieve profitability, or at least have a profitable quarter of quarter four of last year. So that's great. But again, it comes down to the consistency, right? Because buy now pay later companies, it doesn't matter if they're going to start expanding to things like groceries, right? It all comes down to who's going to be utilizing their company and how many people, what the exact volume of customers there will be to utilize these buy now pay later options for whatever they're purchasing online, right? So again, don't expect to see gross profit margins to be at 50 or over 50%. I mean, that's something that you guys should never expect from these companies. At least look for, I don't even know, like maybe 10 to 40%, like a firm here, since they've been able to stick to 40% or over gross profit margins for all of 2025. I believe the high was like at 48.25%, if I'm not mistaken, from what I've read on their statements from one of their quarters. But it's just one of those things where you have to stay vigilant with the numbers. So of these companies report on their quarterly earnings reports, and so if you're not looking to invest into buy now pay later companies in the longer term, great, right? Because it's one of those things where you have to understand that these companies are very volatile for a reason, right? So these companies, most of the buy now pay later companies that are publicly traded have high betas, right? And they move a lot more every single day compared to the overall markets, and the price volatility is very high, right? And you guys can, if you're able to just take a look at a firm's options chain, their IV is through the roof, right? And even at the money strikes, the IV is pretty high, and so sometimes obviously there are option sellers, option writers that will take advantage of this. But again, if you're trying to buy leaps or anything like that, leaps are also fairly expensive, and due to the IV pump that all these contracts have gotten, and with the firm here specifically, I would say it's a very tradable name at the very least. The average volume here, as seen on the weekly time frame that I'm showing you guys here on the screen, sticks to at least 25 to 30 million per week. So it's a very liquid stock to trade equity, and also the options are also very liquid as well, with the volume being at least over 1,000 and the open interest as well being over 1,000 as well too. So I would say, in conclusion, right? Before I go into the technical analysis here of a firm, you guys should know your own risk tolerance and your own individual trading styles to determine whether or not you will be able to hold a firm for the longer term. And when I mean longer term, I mean 3 to 5 years, okay? And be able to hold that for 3 to 5 years, or if it aligns more towards your maybe scalp trading or day trading, well, a firm is great for you, right? Now, regarding swing trading, a firm can be a very volatile stock, right? I mean, and it even in it's just the last couple of months here into late last year as well, there's a lot of fake outs and shakeouts that occur for both buyers and sellers. All right, I mean, here's one weekly candlestick here, right? Here's another one right here, and the next week after that, it was a complete breakdown. I mean, even today, right? Even today was a great example, okay, compared to last week, right? So last week's candlestick, very nice, very typical bullish candlestick, and then today we completely erased most of the gains that we saw last week. So again, my point being here is that you guys have to know your own risk tolerance, your own trading styles to be able to even look at a name like AFRM. It's a very high beta, very high volatile stock for a good reason, right? And also, again, you guys have to think about your horizons, your time horizons, and the fact that a firm and all these other buy now, pay later companies could be very much become a cyclical company, even if they are, growth tech stocks, right? And it's personally for me, it's kind of hard to say that they're growth because again, they're so directly tied to those two main factors that I talked about earlier about consumer behavior, consumer sentiment, even for example, like the U.S. retail sales report that we'll be getting tomorrow, or I think on Wednesday or Thursday or tomorrow, I forgot. But all those different economic indicators can affect these companies and how they will trade in the future, right? And even just the fact that these companies are tied to the economic cycles of this country is a little bit shaky, right? So again, please know your time horizons and your own risk tolerances. And with that being said, let's get to the technical analysis of AFRM and see why AFRM could potentially reach that golden whole number triple digit level of 100 as seen here on the title of tonight's stream, right? So that's my question that I'm trying to answer, right? Can AFRM rise to 100? So first of all, from a technical perspective, AFRM has been one of those companies that have been, I haven't seen it too much, but I've seen it here and there, but it's been compared a lot to Carvana, right? And the reason being is that, well, AFRM was also a single-digit stock back in 2022, most of 2022, and most of 2023 until late 2023, we saw a nice big push upwards back towards that double-digit number. And from that point onwards, we got this very nice long bull flag that eventually broke to the upside in a very volatile manner. Okay, I mean, you guys can see this, right? And that began the official longer term trend to the upside with higher highs and higher lows. So you guys can't see that here. Let me make it a lot easier. So we have the higher lows, all right? Now this is from a longer term perspective, okay? I'm just pointing out all the anchor points, okay? The major anchor points. I guess I can add this one too, right? Okay, so we have the higher highs, okay, higher lows, and again, we have yet to see if we're gonna make another higher high. But I want to focus on this specific pivot point here. Okay, so on this weekly candlestick, we actually hit 100.00. Okay, had a little pause to add a little bit of a dramatic effect there. So hey, what's up guys? Hello, welcome. Make sure you guys hit that like button down below. See more people coming in now. Okay, so this previous pivot high point, all right, we need to be able to retest it, and so far on this weekly time frame, we are starting to form a very nice rounded base. Okay, and whenever we see this, we tend to, even during the formation of this rounded base, we tend to continue to curl up higher to the right side, right, to the right corner of the screen here. And in order for this rounded bottom or rounded base to occur or to finalize and to finish forming this chart pattern, we need to get back to this neckline resistance level at 90.00, so $90 flat. Okay, and this is where things get a little bit shaky though, okay, because rounded bases or rounded bottoms, obviously it's not a rounded bottom since we are in an actual textbook uptrend in the longer term perspective, in the bigger picture perspective as well. Hey, what's up, Snowy Shade? Hello. If you just dropped in, make sure you watch the replay. And for anyone else who just dropped in, make sure you guys watch the replay. I say this every single time if you guys come in the middle of the stream, because I always say the most important parts of the stream at the beginning of the video or the stream replay. So make sure you guys watch the replay. And again, don't forget to subscribe and hit that like button down below as well, because this channel is growing pretty quickly to start this year. Okay, so AFRM again, this, as I was saying here, this rounded base, right? There are some precautions to take because sometimes we sometimes see kind of a failure of this rounded base, in the fact that, well, today is a great example. At one of the major resistance level at $84, we saw a massive rejection today, and this is just 1 day's worth of price action. Okay, right here on this weekly time frame. If I just go down to daily now, okay, that is a good segue to go to the daily time frame, right? This is nasty, right? We have the increasing selling volume to confirm this massive range, this price range and price volatility that we've seen to the downside, and this is kind of showing signs that this rounded base is not going to complete forming by hitting, at the very least, reaching this $90 whole number neckline resistance level. So if that does occur, don't worry, right? Because there's still a lot of major support levels down here, but we'll have to, it will be basically negating this very nice base that had formed on the daily, weekly, and even on the monthly time frame. Okay, you guys can see on the monthly here too. Okay, nice little curve. Okay, so if we go back on the daily time frame, okay, so based on today's price action, okay, and the fact that overnight we saw a nice massive gap, I think it was at like 87 to 85, I think. There is a lot of there was a lot of selling pressure right into the open of today, right? And I obviously ended up opening up at 84 around this my major level here, which is absolutely great, which was absolutely great to see. But the trading that followed was not good to see, because now we have ended up and closed with and printed a bearish engulfing candlestick, right? It's completely encompassed the previous day's range. So this clearly tells you that sellers are in control, and the supply that surrounds, or that is between 84 to 90 has been, well, not absorbed at all, and all the sellers came back that were there previously around here, right after the earnings gap up candlestick, right? So this was kind of that moment where sellers said, nope, we're not going to give you that 100 share price. We're gonna smack you right back down, right? And they continue to pile in and just formed a massive supply area and range from 90 to 84. And today confirmed that supply was still there. And with this massive rejection at 84, and obviously it broke below the previous daily support resistance level at $79. So instead of retesting and pivoting away from it today to give bulls a bit more confidence, sellers came in stronger and smashed through this previous resistance level, which again is now currently the resistance level once again. Okay, so you know this is something that you have to be careful in the rest of this week. You know, obviously we had a bullish bias coming into the week, but again, that does not mean that we will just have to give up on this potential future entry point at 84, because if this is just more development that is needed on this overall rounded base chart pattern, then so be it, right? We would just want to see the price at the very least sitting and staying and moving sideways between 70 to 79. I know it's a very wide range, a 9-point range, but as long as it's able to maintain the ranges that have formed during the entire formation of this rounded base for all of Q4 of last year, then there is still a good chance that bulls can regain more the momentum and bid the price of par back to this major $84 level. Okay. Hey Todd, what's up? Could you look at ARDX? Is that a head and shoulders on the monthly and weekly? Would like to know your thoughts. Thank you. Okay, sure. I'll take a look at that once I'm done with AFRM here. Okay. So again, so far, let's see, I've been live for about almost 30 minutes, I think. Right? Talking about AFRM. Okay. So that has kind of been my overall general summary from a fundamental and technical perspective. So my conclusion from a technical perspective now is that I don't think AFRM will be seeing 100 anytime soon. Unfortunately, to all the AFRM bulls out there. Okay, so however, okay, All right, there are still those potential cyclical moments that I talked about from a fundamental perspective that AFRM could benefit from or become a beneficiary of. And if that does occur in the near-term future or mid-term future, who knows, maybe this sometime somewhere in this year, there is still that chance that we can be seeing 100 before the end of this year, at least one more time, right? Because we saw that in late August of last year due to the earnings reaction candlestick. So my own personal conclusion is that there's still mostly going to be a lot more sideways for this stock, and I know there's been a lot of chatter about buy now, pay later companies due to President Trump's kind of tirade against the traditional credit lenders and credit card companies, right? Like Visa, MasterCard, American Express, right? With the 10% credit rate cap or something like that for like a year or something, right? So obviously he doesn't have control over that. The regulators have control over that, and I believe that's the reason why AFRM actually sold off, because they don't know. Well, it's known that that Trump can't actually just enact and enable that at all. But anyways, right? Irregardless of that, all right, that crazy event from the president, okay? AFRM still very much should be on your radar. It will be for the rest of this week, even if it was a very unfavorable price action heading into the week, since we did have a more of a long bias due to the current events, due to more of an uptick in optimism surrounding buy now, pay later companies in the last in the last 2 years since 2024, ever since AFRM's peer, right, Klarna, right, ticker symbol KLR or KLAR. Okay, so please have this on your watch lists. All right. So with that being said, Todd, let me go over ARDX. Okay. Oh, is this this looks like a biotech company? Is it? Ah, okay, it is. Pharmaceuticals. Okay. Yeah, I guess I already see it. Yeah. So let me just take a look at the weekly. We see. Yeah, I mean, this is so usually I wouldn't be looking at stuff like this because again, a lot of biotech, pharmaceutical, any of the biotech companies out there that fall under the umbrella term of biotechs, they're very, very subjected to FDA approvals, a lot of FDA events, or just the overall reports that the company can share to their investors on a specific clinical trial, right? Phase 1, phase 2, phase 3, whatever it is, right? But again, irregardless of that, from a technical perspective, this looks great. It is on the cheaper side, but I would say there is that neckline resistance, or I would say neckline. Not even just a neckline, but just an overall supply area and range from 8 to about $10. So nice 2-point range, which is very for this ticker. Okay, but yeah, I could see what you're talking about here. I mean, I can just see it on the weekly time frame. Here's the left inverted shoulder. Todd, hopefully you're still here. And here we have the inverted head, right? And currently we are trying to form the inverted right shoulder, and I'm gonna have to do a lot more research on what this company does, but hey, the technical is there, right? The technical aspect is there. We just broke out of a massive flag here, a nice bull pennant. Okay, right? So obviously the kind of the perfect technical entry point was last week, right over $6.50. So if you're looking for a potential retest at this level, I mean you can try, but it seems like it wants some time. Hopefully the ideal scenario goes like this, where after rejected this $8 resistance level, this neckline resistance level that is combined with the neckline supply area from 8 to 10 of the massive macro inverted head and shoulders, right? you want to see something like this, right? Where we tightly consolidate right underneath this $8 whole number resistance level before it decides to break out and absorb the supply that has already been established from $8 to $10. And again, if you want to know where that was established, every single time the prices tried. Let me actually. Okay, so every single time. Oh, we're back. Okay, so again, you can clearly see that the supply range from 8 to 10 has been very apparent from all the different times that the price tried to get over it, right? Okay, and that's the most recent one here. Okay, so again, the price could be attempting this this potential reabsorption of supply from 8 to 10 in the near-term future. So Todd, that is your technical analysis for this ticker. And then Snow Shade, I'll do ONDs right after this. But again, if you really want to avoid all this noise in between 8 to 10, you can just simply add an alert at 10 and add an alert of the price breaking over $10 in the near-term future, and you can just get in at 10 because you'll be able to, well, if the price is breaking over $10, then it will be pretty good to assume that the supply from 8 to 10 has been absorbed at that point. Okay, so yeah, that's just from a technical perspective. I don't know anything about this company. I don't know what catalyst that they had last week, or maybe this is just the fact that there were just some good biotech inflows that are coming in. Okay, all right, so Shade, this will be the last one here for the stream, since this stream is mostly about AFRM, but I'll be happily willing to do any type of technical analysis, since I actually haven't done, guys, for anyone who's just joining us now, I actually haven't done a technical analysis, strictly technical analysis stream where you guys give me tickers and I do them and go over them for you guys, since I know a lot of people enjoy my technical analysis and my own personal thoughts. So if you guys really want me to do another one of those streams anytime this week or in the future, maybe add it to the streaming schedule, please let me know by hitting that like button down below and also hitting that subscribe button as well. Okay, it really helps me understand what you guys like and what you guys don't like that comes out of this YouTube channel. Okay. Okay, I see some reactions there, so maybe I will do that. Okay. And again, this again, thank you guys so much for even just joining the stream, liking the stream, and even subscribing if you're new here, because again, this channel has been growing pretty quickly to start this year out, and we're already at 614 subs, and so it's just one more step closer to having 1,000 subscribers on this YouTube channel by the end of this year. So again, thank you guys so much for joining. Okay. Alright, so again, if anyone has just joined now, please watch the replays of any of my streams if you guys missed it. Alright, so Snowy Shade, I'll finish off. Hey Joel, thank you for your comment. So let's look at ONDs. So I know this one has been a huge momentum stock, and so far right now it's a bit overbought, but momentum is there, right? I brought the MACD here. You know, the time difference helps. Awesome. All right, so yeah, because I'm in the Pacific time zone here. So hey, okay. So ONDs, you know, this one's a little bit shaky right now. I mean, just based off of today's reaction to new 52-week highs, right? It's made 3 consecutive 52-week highs, and every single time we tried to get past this $15 level, it just continues to reject, right? And like you said, right, that nasty rejection at $15, and I would say you're gonna have to try to give this one time. You know, the perfect entry was around $10, or if you want it to be very early, I would say $9. So if you miss this rally, it's better to not chase at this point. I mean, this right here are these 3 nasty rejections here at 15. It doesn't bode well. It's already, I mean, just take a look at the weekly, right? I mean, this is a very nice move if anyone caught this as a penny stock here, right? I know, kind of reminds me of the other penny stocks that we caught. Okay, but we won't go over that. That's strictly for members and readers of the CFO Swinger Watch Report. But you know, ONDs, this one has yet to unlock the true value for the longer term to be able to maintain a double-digit stock. Okay, so I think at some point this year, a lot of these stocks that have gone from literal pennies to double digits, they're going to need to start showing why they can remain at this valuation. And even before they even get to that point, as to why they can fundamentally show investors and show the overall markets, show analysts, right, Wall Street analysts, why they have this valuation now, even before they even come to that again, they'll most likely go down. Unfortunately, okay, they'll go down first, right? They'll pull back first, and then once the volume goes down, because again, this is a usual volume curve, the average volume curve that I tend to see off of these very big momentum names, right? Let me even just give you this very quick overview, right? So we kind of follow this line here, and we tend to just overall start to steeply curl downward in volume. And during this period, the right lowering of the volume here, the right side, that's when analysts, long-term holders, long-term investors start to look for reasons as to why ONDS can maintain this current valuation after that initial pullback. And if they can't, well, that's further decrease in share prices in the long-term future. Okay, but then again, there is a lot of trading opportunities in ONDS and very high volume, high octane stocks like this, right? Again, the overall theme is hot. All right, I believe this is defensive. No, telecommunications. I think this is grouped in with some defensive stuff, if I'm not mistaken. Doesn't really matter. I'm only looking at this from a technical perspective, so I don't really need to know the fundamental reasons just yet. But anyways, I think Chef, ONDS, yeah, just watch out. Maybe we can even just grab some puts for the first quarter for ONDS, right? But again, yes, the overall cult following on the stock has been strong. I know that. First of all, you can see it on X, you can see it on StockTwits, right? You can see it on Reddit. The stock is everywhere, but it is reaching a feverish pitch. Okay, so what is that indicator that I'm using? Which one? Where? This one? The MACD? Which indicator? Let me know. Or maybe you heard wrong? I don't know. Anyways, okay. So, there's just a lot of it's overtly bullish sentiment on ONDS right now, and based on the overall sentiment and based on how the actual price has been trading, I would try to avoid this if you're trying to long it. But if you want to short it, I mean, go ahead. I mean, this is a nasty inverted hammer candlestick that is backed up by volume, including from last week, right? This is 3 consecutive rejections at $15. So there's clearly sellers that do not want this to reach new 52-week highs, and I believe new all-time highs, right? Let me see. Oh, I see. Yeah, okay. I see. Yeah, it's the MACD, yeah. I just want to show you the momentum here for MACD. Oh, this line. This is the average volume line. Yeah. It just comes with the volume bars here. Yeah. It's a default setting from TradingView. Okay. So now, as far as a quick trading plan here, if I take a look at the 4-hour time frame, I mean, this could be a pretty easy short to the downside. Chef, because yeah, I mean, if you said my stream's all slightly behind, yeah, that's fine, that's okay. No worries. So you're in the other side of the world, so okay. So for ONDS, I think once it's able to break below today's low, which is at $12.84, I think it's a very quick and easy target to 12, and eventually the 4-hour 21 SMA here. I don't know if you use that SMA. I believe, Chef, you've used... Do you use EMAs or SMAs? I mean, it doesn't really matter, but... Yeah, I mean, it closed below the 4-hour 10 SMA here, which isn't... it's usually not a good sign for upwards momentum. So, and usually when we do see that initial pivot lower and close lower below the 4-hour 10 SMA on a day trading perspective, this is my own personal knowledge from day trading. I don't do that, but I know how it works. Obviously, why wouldn't I? The price is able to actually have a fairly quick move to retest the next major SMA on the 4-hour time frame, which is the 21 here. And the 21 is sitting at $11.54. It closed right at that level. So just maybe, right? You know, we might be able to see the price come back down to $12 on the intraday and retest the 4-hour 21 SMA around, let's say, $11.70, and that could be a very quick trade to the downside. So I would say that could be a very nice trading game plan for tomorrow for ONDS, since I know you'll be most likely looking at the 15-minute or 5-minute time frames as well too, right? So yeah, but yeah, that's kind of my my plan for you there on the move to the downside for ONDS. And obviously from a longer term perspective, right, on a daily time frame, I mean that this $12 level is just absolutely perfect for a first profit target, and obviously the previous high here around $11.55 too. Okay, and that kind of aligns with that 4-hour time frame as well, right? Alright, so you see what I did there? Nice coinciding targets right at that 21 SMA seen here too. Okay, so this will be your target goal, right? And obviously the goalie that will be in this range will be the buyers here, willing to buy back the price at a much cheaper price compared to the highs that we saw today and last week. You use EMA, but I go back and forth with them. Yeah, I mean, they're kind of the same, obviously. One's the exponential moving average and one is the simple moving average. Most day traders and scalpers use EMA since they have they're a lot more sensitive to price action, and simple moving averages are a lot more focused on the time frames, right? It moves a lot slower, right? And it provides you with a bigger picture perspective. So yeah, anyways, that's my overall technical analysis in ONDS. Okay. All right. Of course. Hopefully you're having fun on the other side of the world, man. And yeah, that's it, guys. I just want to talk about AFRM today, and obviously the other tickers that I've done. And if you guys really want to have me go back to doing those technical analysis streams where I just strictly go over the tickers that you guys tell me on the stream, please let me know, and just hit that like button down below, watch my videos, subscribe to the channel, right? Do things that will let me know that you guys are with me and you guys really want to see more streams like that, and if you want me to bring that back. And again, I see you guys' reactions as well on the chat room there, so I guess I will have to bring that back sometime this month. All right. Okay, well, that is it for tonight, guys. Thank you guys so much for watching. If you guys are new here, make sure you guys hit that subscribe button and the notification bell icon that comes up. It pops up right after you hit that subscribe button. And if you guys aren't a reader of the CFO Swinger Watch Report, make sure you guys check it out by using the second link in the description box down below. All right. With that, good luck tomorrow, and I'll see you guys on Wednesday at 8 p.m. Pacific Standard Time or 11 p.m. Eastern Standard Time. Have a great rest of your night.